Hey everyone, welcome back to the channel. Today we're diving into one of the boldest calls we've heard in a while. Dan Ives from Wedbush is saying Palantir could hit a $1 trillion market cap within the next 2 to 3 years. Yeah, you heard that right. $1 trillion. He sat down with CNBC alongside Brant Thill from Jefferies, and let's just say it was a classic bull versus bear showdown over Palantir's stock. Dan Ives came in hot with some massive claims about the company's role in the AI revolution, while Brant raised some serious red flags about the valuation. So here's how this video is going to go. I'll first show you the CNBC clip so you can hear exactly what Dan Ives said. Then, I'm going to break it all down with my own detailed reaction and analysis, point by point. If you're thinking of investing in Palantir, or just want to understand the hype around it, don't skip this one. Make sure to watch all the way to the end, because I'm going to connect the dots and share what I think this means for investors like us. Smash that like button. Let's aim for 1,000 likes on this video. Don't forget to subscribe to the channel for more investing updates and drop your thoughts in the comments. I want to hear what you think about Dan Ives' trillion-dollar prediction. Alright, let's roll the clip and hear what Dan Ives had to say.
Well, joining us now is Jefferies' Brant Thill and Wedbush's Dan Ives with opposing ratings on the stock. Brent has an underperform and Dan has an outperform. So this is a good old-fashioned bull-bear discussion here. Dan, you're on set. I'm going to start this conversation with you. Your reaction to the commentary from 𝗗𝗜𝗦𝗖𝗢𝗗𝗘, who basically said to me, look, macro uncertainty, if you can deliver value in this market, people are still going to spend, companies are still going to spend, governments are still going to spend, and they're seeing that in their results.
I mean, look at those numbers. I think you could print this press release off, frame it, and put it in the Louvre, because if you look at the numbers, you look at commercial, you look what, in terms of AI, they are leading when it comes to AI revolution. The software numbers are showing, even on the government side. And look, if you look at the bears, they hate it at 30, despise it at 50, absolutely say it's expensive at 100, 125. Look, I believe this is going to $1 trillion market cap in the next 2 to 3 years. These numbers just show. I think it's get the popcorn out. It's still in the early days of playing out.
Brent, want to get your thoughts on this, especially since you have a price target that is markedly lower than where the stock is trading right now, basically half of where it's trading right now.
And Dan's price target's lower than his bullish view.
That's true.
Look, I think when you think about the fundamentals are alive, right? They beat by 24 million. They raised the guidance by 6 times the beat. We're not arguing the fundamentals. They are fully alive. The question becomes, there's not a single software stock that we've ever covered that trades at this multiple and sustained it. Snowflake, Datadog, you go through the list. So it's largely just history and valuation lessons, which haven't worked for any of these names. And so we watched Snowflake go to 50 times revenue and then went to 8 times revenue. And so Palantir is in a different league. There's no question the fundamentals are delivering. It's just the question, what is the stock worth? And our job is to find names where we don't feel like there's downward pressure on multiples, there's upward pressure. So Microsoft, Apple, there's a handful of other names that Jefferies covers that we're recommending that we just feel are great franchises and have better durability at multiples that aren't at 65 times revenue. There's not a single tech name that's ever sustained that multiple.
Dan, I hear what Brent is saying, but in a world where NVIDIA and Tesla have done what they've done recently, does history have that much bearing if you believe, as you seem to, that Palantir is this generational opportunity?
Well, I think, but look, I mean, the value, if you go back the last few years, right, I mean, they hated it at 10, despised it at 100, and that would be the continued argument on valuation. If you look what's happened to AI revolution, $2 trillion of spend over the next 3 years on the software side. It's their world. Everyone else paying rent, and it comes to Palantir. So my view is, if you look at it just on valuation, and if you went back, you've missed every transformational tech stock the last 20 years. If you just focus on valuation, where is this in the next 2, 3, 4, 5 years? And I view what 𝗗𝗜𝗦𝗖𝗢𝗗𝗘 doing to Palantir is generational. But again, the haters are going to hate. I get it. Valuation, check the box. You look at these numbers, to me, I think this is just another sort of table pounder moment, you know, for what I view as the Messi of AI, Palantir.
So, Brent, what breaks Palantir then in the amazing run that it's been having? Is it overall sentiment? And if it's an overall sentiment issue, how many other things have to break at the same time?
I think ultimately you hit a point which you've hit on the multiple. I mean, look at the numbers, and the stock's down 5% in the after hours. If there's some break point where, investors, this has been fueled by retail. There's not a single institutional investor I talk to that even talks about this name.
And that's part of the problem.
It's a retail-driven story, and it's not being driven by institutions. Our investor base is institutions. And so the reason why I spend such little time is no one can make sense of the multiple. And so I spend my time on things that have multiple support. So again, I'm a huge fan of the fundamentals. I'm not going to argue, and I think Dan's had a great call. So kudos to him, and no one's going to take that away. It's just my view is I think there are just other stories that we have more confidence in with that valuation support.
Dan, I'm going to let you respond to this.
No, I'd say Brett brings a really important point, because retail has been way ahead of institutional on Palantir. And Palantir, again, they continue to hate it, and they'll continue to hate it when I believe it's up another 40, 50, 60%. Part of the problem here is that institutional, they paint it with a certain brush. They have a certain negative view. And I agree with what Brent's saying. I think institutional has been way wrong on this. Retail has been right. But I do believe institutional eventually, just given, from a weighting perspective, you can't just continue to hate what I view is going to be $1 trillion market cap.
So, right off the bat, Dan Ives comes in hot. He's not just bullish, he's ultra bullish. I mean, the man said you could take Palantir's earnings press release, print it out, frame it, and hang it in the Louvre. That's some legendary Wall Street poetry right there. Dan's entire thesis centers on Palantir's leadership in the AI software revolution. In his eyes, the numbers from their latest earnings report are proof that Palantir isn't just participating in AI. They're leading it. And he's not just talking about enterprise clients, he highlights strength on the government side too, which we know has always been one of Palantir's major strongholds. Here's the kicker though. He's not just hyped by the fundamentals. Dan is going all in on the macro vision. He says this is a company poised to hit $1 trillion in market cap within 2 to 3 years. That's a bold call, but he backs it up by pointing to a projected $2 trillion spend in AI over the next few years, especially on the software side. In his words, it's their world, everyone else is paying rent. Now that's a powerful line, and if you believe the AI race is just getting started, it's hard to ignore. But of course, not everyone's on board with the hype train. Enter Brant Thill. He's calm, measured, and he's basically saying, look, fundamentals are solid, no doubt, but valuation is where this whole thing falls apart. And he's got a point. Palantir is trading at around 65 times revenue. That's nosebleed territory. And as Brant points out, no software stock has ever sustained that kind of valuation for long. He references examples like Snowflake and Datadog. Both had sky-high multiples during their peaks, and both came back down to earth. It's a cautionary tale of what happens when momentum cools and reality catches up. So for Brant, this isn't about whether Palantir is a good company, he agrees it is. The issue is, what is it worth, and can that valuation hold up over time? And this is where things get really interesting. Because Dan fires back and says, if all you ever focus on is valuation, you'll miss every transformational tech story. Think Amazon, Tesla, even Nvidia. Every single one of them looked expensive until they rewrote the rules. In Dan's mind, Palantir is the Messi of AI, an elite, once-in-a-generation player. And if you're too focused on today's multiple, you're blind to the scale of tomorrow's upside. He also makes an interesting point about retail investors being way ahead of institutions on this one. He's basically saying, retail gets it, institutions don't. And that might explain why the stock can look irrational at times. Because it's not being driven by Wall Street suits, it's being powered by retail conviction. Brant concedes that. He straight up says institutional investors aren't even talking about Palantir. To them, the valuation doesn't make sense. And if they can't model it, they're not touching it. That's why Brant says he focuses his time on names like Microsoft and Apple, companies that trade at lower multiples and still offer strong durability and growth. But Dan's rebuttal is clear. Institutions were wrong before, and they'll be wrong again. Eventually, when the numbers become too strong to ignore, they'll be forced to buy in, likely at higher prices, and that's when things could really take off. Here's how I see it. Dan Ives isn't just bullish on the company, he's bullish on the entire paradigm shift that Palantir represents in the AI space. He sees them as one of the few names truly positioned to dominate, not just compete. The combination of commercial traction, government partnerships, and AI-focused software products gives him the confidence to ignore current valuation metrics in favor of the bigger picture. Brant's argument is more traditional. He's leaning on historical data, market cycles, and the idea that what goes up must eventually come down, especially when it's rising on hype and momentum. And honestly, that's a totally fair and prudent lens for any analyst to use. But here's the truth. Both sides can be right, at different points in time. If you're enjoying these stock tips, and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments, no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and join today at a 67% discount price. Trust me, your future self will thank you. Also, if you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full, deep-dive analysis on most of the stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Links in the description. Let me ask you this. Do you think Palantir can actually sustain $1 trillion valuation in the next 2 to 3 years, or will it eventually fall back to earth like Snowflake and others? Drop your thoughts in the comments. I'd love to hear what side of the debate you're on, Team Dan or Team Brant. If you enjoyed this breakdown and want more deep dive content like this, don't forget to like this video, share your thoughts in the comments, and subscribe to Stocks Galore so you never miss an update. Before we wrap up, if you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, and it's built to teach you the exact principles used by legends like Warren Buffett and Benjamin Graham. But this isn't just textbook theory. Inside, you'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments no matter what the market throws your way. Whether you're just getting started or looking to sharpen your strategy, this course gives you the tools and confidence to grow real long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you can be proud of, click the link in the description and join today at a 67% discount. Trust me, your future self will thank you. And if you want exclusive stock tips, real-time trade alerts, free investing guides, and full in-depth analysis on most of the stocks I talk about here, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get access to premium content and are part of a growing community of smart, long-term investors. And as always, if you got value from this video, hit that like button, share your thoughts below, and don't forget to subscribe so you never miss the next big investing breakdown. Thanks for watching, and I'll catch you in the next one.